There is one stock that is about to skyrocket. The company had $100 billion in revenue, up 10% year over year. Did miss estimates, but it's a medical distributor. It's one of the largest drug distributors, 100 billion market cap as well. And the company is McKesson, ticker symbol MCK. Money's been flowing into healthcare, medical devices, pharmaceuticals. Those ETFs have done well. Biotech. So that's been the safe haven right now. Other safe havens have been doing okay. Gold's been doing okay the past couple of weeks. I'm talking about. Energy's been doing okay. Specific energy companies are doing better than others. But healthcare is sort of unified across the board. There's a lot of money flowing into all these tickers. Even as the market sells off, AMD is down, NVIDIA is down, Palantir is down, Meta is down a lot after their earnings hit. So you have to be where the money's flowing, in my opinion, and this company seems to be holding up exceptionally well. The chart looks great. There's a clear price level to buy it off of, and it's in the sector that has a lot of attention. So let's jump into a breakdown on McKesson.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is what they do. They do a lot, actually. They distribute medical supplies, and they also provide services, and they sort of have like a private equity style network of connecting doctors and patients and distribute drugs. So that's the company, $100 billion company. They have some institutional owners that recently increased their positions, which is a positive. And this sector as a whole has just been crushing it. I mean, McKesson, this is the chart. It's not like you can buy it up here because it's like, if we look at any given day, you know, maybe you can buy it, but in general, when it's just marching up like this, it's not super easy. So there are certain opportunities to buy it right here, maybe, right, when it's coming over this level. But we're not talking about hindsight here. I'm talking about an opportunity right now where it's again coming up on this level and recently had earnings and is holding on those earnings. So that's the idea. You can see the earnings per share slightly beat. And most charts, if you look across the market, do not look like this. I mean, even if we just pull up some stocks that have done exceptionally well over the past year, A-Lab being one of them, down significantly. This is a semiconductor stock. And if we want to pick another stock, for example, Chevron in the oil, you can't really buy a falling knife like that over the past week. I mean, sure, money's flowing into oil, but that chart looks rough. So you have to think that where the money's flowing, pharmaceuticals is the pharmaceuticals ETF, healthcare XLV is the way to go. If you want to buy banks, I don't think you're going to have a great time. I mean, the financial stocks are holding right now, but as we just saw with that ETF, they're just not quite as pretty. Goldman Sachs, Morgan Stanley, they're down recently. So in my opinion, healthcare and specifically McKesson is a super strong pick for a move upward in the near future. And we can jump in and talk about this company's earnings, but I don't think the earnings are really the story here. I think it's the rotation of money into the sector as a whole, because even though the revenue was up 10% year over year, was below estimates. So this is just another data point adding to the story of Q3 earnings this year, which is that earnings that, you know, came out well. Palantir earnings per share was double the estimate or expected, right? Significant sell-off. So people are selling into positive news. And by people, I mean big funds, high net worths, whatever. NVIDIA earnings, of course, beat on guidance as well. Big sell-off. The only stocks that are really holding up are Apple and Google as far as Mag 7 stocks. And even still, I mean, the sold off. This is kind of holding on by the seat of its pants. Google doing a little better. But Amazon coming down a bit as well, even after what looked like a solid hold for a while there. So money's getting sucked out of the Mag 7 and it's getting thrown into pharmaceuticals and stocks like McKesson. And we can see that in the charts pretty clearly. So that's the real story. Even though the earnings aren't great, this is the business shift as a whole. Oncology cancer centers, which is expected to grow, sadly. And then they are a big distributor of drugs, so that's expected to grow slightly as well. So I don't know the long-term, direction of this company. I don't know if it's worth holding for the next year. But I do know that if we look at all the different segments they have, business solutions, supply chain, logistics, basically they help ship medical devices all around. And they make a lot of money doing that. So they're even in other countries, Norway. So in Canada, a little bit. I don't know even if we can expect a big run up like it's had. I mean, this has already been a crazy run up, 30% just since August, which might not seem like a lot, but when you look at the market as a whole, since August, 30% sounds pretty good when the market went up 4%, right? So it's a slow moving stock, 2% a day. But what are you going to do? Buy Pfizer, right? Which moves faster, but has just gone sideways and sold off on earnings and looks horrible. A lot of these stocks, Novo Nordisk moves faster as well, but in the downwards direction. So I think it's okay to look at these slow moving stocks right now. It's not just healthcare. There are slow moving stocks in other sectors as well that are kind of holding up. I mean, Caterpillar was holding up. It's moves 3% a day. And it's still actually holding up at this level above the earnings pullback and this moving average. So these are examples of massive companies that are traditionally very boring names. I mean, Caterpillar, like look at Walmart, for example. Walmart is another one that's had a great earnings recent reaction. It moves 3% a day. And money's flowing into this company because money can't find another place to go. So McKesson, I think, is a good one based on not only how the chart looks, but also based on money going into that sector. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the post section once a month. And if you want help for $19 for 7 days, that's a Black Friday deal. Head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.